Something really big is changing in the world of wealth. I'm talking about a system that's been around for 200 years and it's all about to end. A totally new rule book is being written right now for 2026 and beyond. Okay, so let's dive right in. You know exactly what I'm talking about, right? You see it in all the spy movies. A secret number, a simple password, and suddenly you've got access to a vault hidden deep inside the Swiss Alps. It's always been the ultimate symbol of financial privacy, of pure discretion. Well, let me tell you, that era is completely, totally over. Gone. The old ways of doing things, of keeping things secret, they aren't just outdated anymore. In this new, super transparent world we're living in, they're becoming flat out impossible. And it all comes down to four little letters: LETA. Have you heard of it? Because this one acronym is quietly changing everything we thought we knew about privacy and our assets. Look, this isn't just some minor little regulation. We're talking about LETA, the Legacy and Transparency Act. This thing is a fundamental, ground-shaking shift towards total transparency. And what that means for you is that the big question isn't where you keep your wealth anymore. The real question is how you structure it inside this brand new, totally transparent system. So that's the big question, isn't it? In a world where everything is transparent, how on earth do you protect what you've built? Well, funnily enough, the blueprint for the future actually comes from one of the quietest, most unassuming countries on the planet, Norway. Just look at this number: $1.6 trillion. That's the size of Norway's sovereign wealth fund. It is the largest on the entire planet. And yeah, it was built on oil money, but what keeps it going, what makes it so powerful, is a rock-solid, incredibly disciplined philosophy. Think about it. When the markets are in a total panic, they stay completely calm. When everyone else is chasing hype, they just stick to the plan. And that plan? It's brilliantly simple. It's a formula that honestly we can all learn a ton from. It's called the 70-25-5 formula. But listen, this is so much more than just a way to allocate your assets. It's really a philosophy for building something that can last for generations. So let's break it down. How does this thing actually work? All right, so it breaks down into three main parts. First, you have the fortress. That's your unshakable core. Then there's the shield. That's your defense against all those silent threats like inflation. And then you've got the wild horse. And, well, that's where things get really interesting. Okay, so that first 70%, the fortress, this is literally the foundation of your wealth. We're talking about investing in the absolute bedrock of the global economy. Think broad market indexes, like the S&P 500, and super low risk government bonds. This is the portion of your wealth that you're building for your grandkids. You don't touch it, you don't trade it, you just let it grow, slowly and surely. And this quote just absolutely nails the mindset here. This has nothing to do with chasing quick wins. It's all about the slow, relentless, unstoppable power of compounding over decades. It's the reason Norway's massive fund could weather the 2008 crisis and the 2020 pandemic without even flinching. All right, now for the shield. Let's talk about a threat that drains your wealth so slowly you almost don't notice it: inflation. I mean, the cash sitting in your pocket right now just won't have the same buying power in 10 years. So the question is, how do you defend against that silent attack? You turn to assets that have proven their resilience not for years, but for centuries. We're talking about the Swiss franc, which is backed by a central bank that values stability more than anything else. And of course, gold, humanity's ultimate historical store of value. These are your anchors in any economic storm. And finally, we get to that last 5%, the wild horse. This is where you allocate for the high growth, high risk assets of the digital age. Think Bitcoin, think Ethereum. It's a small, very calculated bet on the future, but it has the potential for absolutely explosive growth. And this is a big but, with this wild horse comes a really critical question. See, owning the asset is one thing, but securing it, that's everything. And this right here is where so many people make a catastrophic mistake. Let me be absolutely crystal clear. Holding your digital assets on a centralized exchange is like building your dream house on top of quicksand. These names you see, they're a graveyard of lost fortunes. We're talking billions, with a B, that just vanished overnight. Because here's the hard truth. When your assets are on an exchange, you don't actually own them. They do. So what's the real solution? It's amazing, actually. It combines old world physical security with these new world assets. I want you to picture this. Your digital keys held in physical vaults, completely disconnected from the internet, buried deep inside former Swiss military mountains. It's a place where the only person on Earth who can access your assets is you. And this really brings us full circle. It shows how the whole idea of Swiss security has totally evolved. It's not about hiding gold bars in a vault anymore. Now it's about protecting digital keys while operating in a world that demands full transparency. The secret sauce behind this is the technology called zero-knowledge proofs. And it sounds complicated, but the idea is simple. It lets you prove you own something to a system, let's say a bank or the government, without revealing any of your personal information. It's like proving you have the key to a door without ever actually showing anyone the key itself. Pretty cool, right? And this is the new key. This is how you navigate a world with laws like LETA. Your assets are visible to the system, just like the law requires, so you're totally compliant. But who actually owns them and how they're managed? That remains strategically private. You're playing by the new rules, but you're playing it smart. Okay, so this is all great in theory, but how do you actually put it into practice? Let's break it down into a simple, actionable plan. All right, step one. Start merging your physical and digital assets. There's tech called tokenization that lets you turn something like a piece of real estate into digital shares, which makes it way more liquid and easy to transfer. Step two, adopt some currency discipline. Hold a portion of your cash reserves in the Swiss franc. And step three, and this is probably the most important, don't just follow this stuff blindly. Take the time to understand the principles behind it and then adopt them to fit your own strategy. You have to remember, this whole philosophy is built on one simple truth. Real, lasting wealth moves slowly. It moves deliberately. The goal here isn't to get rich by next Tuesday. The goal is to make sure your family is secure 100 years from now in the year 2126. Ultimately, every single financial decision you make is a message you're sending to the future. It's the foundation that the generations after you are going to walk on. So the real question isn't just about how you protect your wealth. It's what kind of legacy are you building starting today?